Good morning, good afternoon, and good evening. My name is Diana Barrero-Zales, and I am the Head of Research and Sustainability at Global Blockchain Business Council. It is a pleasure today to welcome you to GBBC's Virtual Members Forum on the travel rule, from sunrise to dawn with Notabene. We are a biweekly webinar showcasing the innovative work of our members around the world. And today we are joined by Lana Schwartzman, Head of Regulatory and Compliance at Notabene. GBBC member Notabene is a pre-transaction crypto compliance platform, probably the only one on the market right now. Its Safe Transact platform helps financial institutions and crypto businesses unlock their full potential in the digital economy. With a focus on security, privacy, and end-user experience, Notabene customers use multi-source data and software to automate real-time decision-making, perform counterparty sanctions screening, identify self-hosted wallets, and complete the smooth rollout of travel rule compliance, all in line with global and local regulations. That is so important today. And briefly, before we begin, I'm going to introduce Lana very quickly. Lana Schwartzman, as Head of Regulatory and Compliance at Notabene, brings over 20 years of experience in digital assets, Web3, fintech, and traditional finance. And she will share with us today a deep dive into what it means to go into travel rule compliance, what is its importance today in the blockchain and digital assets space, and how companies can stay abreast. We welcome your questions to the audience at any point during today's presentation. Please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. So thank you, Lana, for joining us. I will hand things over to you to begin.
Thank you so much, Diana. As mentioned, hi, everybody. I'm Lana, Head of Regulatory and Compliance at Notabene. So yes, I've been in the compliance space for about 20 years now, but 13 of it has actually been in crypto compliance. And I got to do some cool things like mine my own Bitcoin back when you can still do it with an actual supercomputer. I'm also a former chief compliance officer for 2 different crypto companies, the latter being Dapper Labs. And I am really honored to speak to you today about the dawn of travel rule. And as Diana mentioned, Notabene is the premier authority and thought leader on travel rule compliance and regulation, with the most comprehensive and secure pre-transaction decision-making travel rule platform. But before I talk about the dawn and how we get there, let me give you the TLDR on travel rule so that all of the listeners are on the same page. Oh, look, it's Alice and Bob. I've missed seeing them because apparently they're on every transaction, right? So before 2019, virtual asset service providers, aka VASPs, were only asked to monitor their own customers. I know, yes, it's crazy. And so little to no checks were performed when a VASP would send a transaction to a counterparty, and therefore had very little to no visibility on who they were transacting with on the other side. And this always increased that inherent counterparty risk when it comes to sanctions, illicit transactions, and high-risk activity. So leap to 2019, a year that was marked by increased cryptocurrency usage and related risks, which had triggered a significant shift in financial regulations. And so to counter potential crypto scams and money laundering through virtual assets, the Financial Action Task Force, or FATF, broadened its jurisdiction to include virtual assets, cryptocurrency exchanges, digital wallet providers, and others. This transition led to pivotal changes for crypto companies, primarily due to FATF's recommendation 15 and 16. And most chief compliance officers, including myself, were initially in a panic, struggling to understand how to comply with these new requirements and what they meant for our businesses. Recommendation 15's revisions clarified the applicability of risk assessments and mitigating requirements that are related to virtual asset activities and service providers. And meanwhile, Recommendation 16, or the travel rule, emphasized that VASPs need to manage counterparty risk. The FATF guidance makes it clear that travel rule for digital assets is not merely about transmitting information. Instead, the information transmission is instrumental in enhancing VASP's compliance framework for reporting suspicious activity, freezing accounts, and prohibiting transactions with sanctioned entities. Now, when implemented correctly, this regulation is revolutionary because for the first time in crypto history, we have the ability to prevent potential illicit and sanctioned transactions from reaching the VASP before they're even created on the blockchain. This gives VASPs the power to reject such transactions and thereby reducing overall risk exposures to sanctions. Brilliant, right? Let me repeat that. We have the ability to stop potential illicit transactions before they are created on the blockchain. So what exactly is the sunrise problem and who cares about it? Travel rule, like the sun, rises at different times around the world. The sunrise period refers to the period during which travel rule is not in full effect across the different jurisdictions, which causes various stages of implementation and enforcement. And we especially saw this in the early days. Fully complying with the travel rule during the sunrise period was difficult for VASPs, as crypto is inherently borderless and international. So VASPs based in countries where the travel rule is already being enforced had a hard time being fully compliant. And in some instances, may not have been able to send or get a response from a travel rule transfer from their counterparty VASP because the counterparty may have been in a jurisdiction where the travel rule was not yet enforced. Now that we know what the sunrise period is, so why care about it? Well, the regulatory pressure is now on more than ever before with us, reaching global regulatory tipping point with EU and pushing the industry towards critical mass in terms of adoption. And FATF acknowledged that the sunrise issue remains one of the key challenges for travel rule compliance. They pointed out that until all national regulators require VASPs to implement travel rule, VASPs operating in or from jurisdictions with travel rule obligations will continue to face challenges in executing transactions in a compliant manner. So thankfully, in the past 3 years, there has been a steady increase in the number of jurisdictions that have passed or in the process of passing regulations, as you're able to see here on the slide that I put together for you. And every year, we issue our State of Crypto Travel Rule Report with results from our industry survey. And in this last one, the Sunrise issue secured the second spot on the ranking from third position last year. You would probably not expect that, as you saw from the prior slide, that the growing adoption of travel rule would soften the negative impact of the sunrise period, right? Well, in a way it did, but this trend is likely being offset by also the growing regulatory demands, because since now more jurisdictions are passing or in the process of passing travel rule regulations. Before, VASPs had more wiggle room when dealing with counterparties who weren't yet complying with the travel rule. But now, with the regulations tightening up, that flexibility is shrinking. And legal urgency isn't the only reason to prioritize compliance. Counterparty urgency is equally crucial. If failing to comply with the travel rule leads to your counterparties refusing to transact with you, that creates a strong incentive to comply. To gauge how counterparty urgency is evolving, we surveyed VASP about how they handle withdrawals when they are not able to transmit travel rule information to the counterparty VASP, which is the same thing as saying, what do you do if you're unable to comply with the obligation of transmitting travel rule information? There were three main answers, and notably, 23% of the respondents indicated they don't allow withdrawals unless a travel rule message can't be sent to the beneficiary VASP. This represents a significant increase from last year's survey, indicating that VASP's tolerance for transacting with non-compliant counterparties is decreasing, and policies are becoming stricter. Overall, the data showed that 66% of VASPs restrict withdrawals that do not comply with travel rule requirements. Since now more VASPs are compliant with the regulation and they're able to exchange information, the flexibility in dealing with non-compliant counterparts has diminished. And don't forget, it takes two to tango. If one party doesn't play by the rules, the other has the increasing obligation to no longer transact with them. The number of VASPs holding transactions when they can't send a travel rule data transfer has nearly tripled. And so reachable and active travel rule counterparties is now vital for businesses. What we saw in the industry aligned with what FATF put on the latest targeted update. They stated that 65 jurisdictions that have passed legislation enacting travel rule and an additional 15 where they were in progress, so let's not forget those. But about half of them have measures in place to ensure that domestic VASPs are only transacting with regulated and or travel rule compliant counterparts. So they're in alignment. So we know what travel rule is. We know what the sunrise problem is and why care about it. And now I quickly wanted to cover the top challenges in complying during the sunrise period. And part of why we care about the sunrise issue is understanding these challenges it presents in complying during with this period. And the first one is difficulty sending a travel rule data transfer. And compliance with the travel rule requires the originator VASP to collect and transmit information about the originator and the beneficiary customer to the beneficiary VASP. But many jurisdictions have yet to implement the necessary systems. And so when a beneficiary VASP cannot receive or protect this information, the originating VASP cannot fulfill its obligations. This issue is already affecting transaction flows with more VASPs adopting stricter policies. Then you have difficulty receiving a travel rule data transfer. And here, similarly, if the originator VASP is not yet transmitting travel rule information, this leaves the beneficiary VASP unable to assess information about the originator. And depending on the regulatory approach that the relevant country uses for transacting, transactions missing travel rule information, the receiving VASP may need to restrict access to such transactions. And when a VASP is required to restrict the transaction, there is significant operational impact on its business. Lastly, there is a challenge of screening the transaction's counterparty. When a VASP acts as the originator, it screens the beneficiary information provided by its customer before attempting to transmit the travel rule data. However, without confirmation from the beneficiary VASP, the originating VASP cannot verify the accuracy of this information, making the screening results unreliable. Similarly, beneficiary VASPs face issues when deposits lack the required originator details. Without effective travel rule exchanges between VASPs, it remains relatively easy for illicit actors to evade screening by providing false counterparty information. And again, this is another reason why reachable and active travel rule counterparties is now vital for business. Well, we are in Q3 of 2024, and there is one hell of an exciting Q4 coming up with the applicability of the TFR in all EU member states. Through the years, we as an industry have spoken about the Sunrise issue pretty much over and over and over at this point. But guess what? The sun has now risen. Key jurisdictions like UK, EU, Hong Kong, UAE, US, and Singapore have implemented travel regulations. And newly added jurisdictions such as Seychelles, Malta, New Zealand, Turkey, Jersey, Argentina, Korea, Nigeria, and many others have also introduced travel rule regulations. And so, welcome to the dawn of travel rule. Many, many more jurisdictions this year, and specifically the next 6 months, have announced plans or are currently in consultation or clarifying their guidelines, such as South Africa, Isles of Man, Norway, Thailand, Peru, Brazil, Colombia, Chile, and others. That's right, everyone. LATAM is coming in hot and heavy. And not only LATAM, we have the biggest chunk coming in from EU specifically, where we have the big transfer of funds regulation, which sets uniform travel rule requirements across all 27 member states. If, like my team, you've delved into these regulations in exhaustive detail, you'll find that they are highly prescriptive. Along with accompanying EBA guidelines, they provide VASPs with clear and specific instructions on how to achieve full compliance, which is being expected for all EU CASPs by the 30th of December of this year. All of FATF reports are in line with the pulse that we have on the industry. And from our annual report, which we had that previously had mentioned, our report had shown that 96% of VASPs are either travel rule compliant or plan to be by the end of 24, which indicates that we can expect to see a widespread travel rule adoption by the end of the year. Is anyone else as excited as I am? It's certainly keeping me busy. So wondering what others are doing? So many VASPs are rolling out travel rule on a multi-jurisdictional rollout, meaning it's Singapore and EU or UK and EU and so forth. And according to our report, 47% of respondents reported to to comply with the travel rule obligations in multiple jurisdictions, which is a significant jump from 23% that we had last year. And this is just adding the fuel to this dawn of a fire. So why are most jurisdictions ramping up travel rule compliance now and within the next 6 months? Well, within EU, MiCA, and the TFR regulations are seemingly the global regulatory tipping points, as many jurisdictions have to be compliant. And if you want to have a business there, you need to be registered there and you need to be compliant with the regulations. Some have argued that the EU rollout serves as a blueprint for the industry. There is no longer any room for just check the box. True compliance is required. And stable coins are now regarded as a killer use case for crypto, which ironically seems to be the title of many panels in various industry conferences as well. So many companies are heavily focused on developing stable coins. While I'm not sure of the current transaction data, it is remarkable that the monthly transaction volumes with stablecoins peaked at nearly 3.5 trillion, I think it was, around May or June. And let's not forget the travel rule applies to all asset types, including the various stablecoins. Additionally, regulatory clarity is now enabling the traditional financial institutions, whether large institutional banks, retail banks, fintechs, or payment companies, to enter the industry with confidence. And so in 5 short years, we've certainly have come a long way. Let's quickly review. So a travel rule is the obligation to obtain, hold, and submit the required originator and beneficiary information that's associated with the virtual asset transfer in order to identify and report suspicious transactions, take freezing actions, and prohibit transactions with designated persons and entities. So not just transmit the information, you actually want to do something with it. And the sunrise problem is about jurisdictions having their travel regulations enforced at different times. And who cares? Well, regulators and counterparties. Regulatory urgency has reached a critical mass based on FATF's last update of 85% of jurisdictions having travel regulation in place or in process of. And there are many, many more which did not answer the FATF survey. Some of the countries that you've heard me share about that are in the consultation process that weren't in the survey. So there's many more that are expected to be live by the end of this year. And counterparties are also restricting withdrawals. And it's only a matter of time before they altogether just stop transacting with non-compliant counterparties. So reachable and active travel rule counterparties, which not only send, but also respond, is now vital for businesses. We are at the dawn of travel rule, with key jurisdictions coming online within the next 6 months, including the 27 member states of the EU and many LATAM countries, to really tip the scales of this adoption. If you want to know more about travel rule, make sure to download our 2024 State of Crypto Travel Rule Compliance Report. You can also sign up for our Travel Rule Fundamentals certification. We actually launched it this year. It's the industry's first travel rule certification. And between these 2 resources, we trust that you will find everything that you may be looking for. With that, thank you very much. And I know, Diana, if we have any questions.
Thank you so much, Lana. We appreciate you sharing all these insights on the travel rule, going from the sunrise to the dawn, where we're at now, and the application for particularly the blockchain and digital asset space, as so many jurisdictions are coming into compliance. That's great to see the progress that is being made. I'm Diana, Head of Research and Sustainability at GBBC, and I am going to take questions now, which we have a few. So I'll start with the first from the participants. What is the duration of a typical TFR enforcement between 2 VASPs? For example, identifying details of an incoming deposit and reflecting it to customer account after completing checks, or any other example.
So if I understood correctly, a typical travel rule flow happens generally fast, assuming you've identified your counterparties, which is generally part of an onboarding process with us. Everything is working through. It typically happens fast. There are, I would say, if you don't have the required information sent to you and you're dealing with missing information, the TFR and the EBA guidelines are very prescriptive in how to handle that. If you are inside the EU, for example, you have 3 days to request the missing information, get that back, then do all the checks. So it kind of starts to go into detail. So if I understood your question, generally, it's super fast, as normally you would expect with crypto, unless you're not getting all the required information, then that would essentially prolong it.
Great. Moving on to the next question. Is there a risk of unauthorized parties accessing the TFR data during transmission between 2 VASPs?
It's a great question. And, security is ingrained in everything that we do. So there is a risk if you are dealing with, perhaps a platform that doesn't take security seriously, or a protocol. I'm not sure. I can't speak on behalf of others. I can only speak on behalf of Notabene. With us, everything is end-to-end encrypted. We are SOC 2 certified, GDPR compliant, and Singapore DPA compliant as well. So there is no risk of that happening with us. And more importantly, there is as well VASP counterparty due diligence, which essentially is part of the travel rule process, where essentially you as a VASP would be doing due diligence on the counterparties and your top counterparties that you would be transacting with. This is part of the general requirements within travel rule. Our platform is built with that in mind, and we have a whole process flow to handle VASP due diligence with specific authorization controls around the due diligence process and who you're able to share the due diligence questionnaire with.
Fantastic. Next question. What is the best practice for a VAS sending and receiving crypto assets from an EU entity, for example, to Singapore, where information exchanged is less on one end as opposed to the other?
I'm not sure I fully
Rough
understand.
jurisdictional information sharing, where the different jurisdictions may ask for different levels of information.
Okay, so within our platform, we have rules embedded automatically in it that handle the different jurisdictional requirements and thresholds across different jurisdictions. It's adaptive, so depending on what the jurisdictions are and what the requirement is, our basically flows and screen dynamically adjust for that, asking for the essential parts of information that are required. But essentially, the lead is who the originator VASP is. If I understood the question correctly, I hope that was an appropriate answer. And if not, feel free to follow up with me. By the way, to anybody, if I'm not answering fully and you're not satisfied, I can be reached at lana@notabene.id. Feel free to follow up with me.
Great. Yeah, I'm sure there's so much nuance to a lot of this.
Yeah.
And this question goes into more nuance also. When we talk about enforcement fines and non-compliance for the travel rule, you mentioned a process. You mentioned that it takes time. You mentioned that different jurisdictions are at different stages. So how do enforcement fines work by regulators?
Sure. And it's a great question. So it's funny to me whenever I get asked that by customers as well. And, on one hand, right, we don't want to be an industry that is led by, what do we call it? Regulation by enforcement, right? Well, you want to do the right things so that you don't have to deal with enforcement. But on the other hand, people are like, well, if there hasn't been enforcement actions, which by the way is not true for travel rule, there has been. But if, if there hasn't been many enforcement actions for travel rule, then do we really need to take this seriously? I really hope that we as an industry, and just now I'm talking to you as a compliance professional in this space for so long, have evolved and we're able to be at this level at this point where experienced compliance officers are generally of the mindset that absolutely you need to be in compliance with the regulation and not wait for enforcement actions as your guiding post and, the pages that you're going to hold up and say, this is now the time to be compliant because there was an enforcement action on this, right? You don't want to be the first one or the second one or any one of them, I would think, to be part of this. And generally speaking, to answer you, yes, so in FATF's last targeted update, which also could be found on their website, and also I did a blog post on our website, notabene.id, kind of pulling out the main areas around this. So one of them is around enforcement and supervision of travel rule, where FATF is expecting to see more of that. Which to me means if you're going to read the tea leaves, if FATF is calling it out, at this point, we're 5 years later, we're at the dawn of travel rule. The regulations are already in place. What they're expecting to see now is the enforcements on it. I personally have spoken to regulators, which I cannot name, but in various jurisdictions, where I know for a fact they are already examining for travel rule. And they've kind of, doing it a little bit on the lighter side right now. And they've said next year when we come back, if everything is not exactly as it's supposed to be, we will be fining. So take that as what you want, take with it what you want. We're at the dawn. You want to be the first one to get an enforcement action, or the second one, because there actually have been two that I can count of already. Go ahead. I personally would not want to be.
Well, there you go. Very good answer. Now, next question goes into your thoughts, because there's so much gray area. And how would you rate, or what do you consider the level of the industry today in terms of compliance? There's so many layers, there's so many issues, but what can the industry ultimately do better in this space?
It's a good question. How would I rate the industry compliance on travel right now? I wholeheartedly do believe in what I'm saying, that we are at the dawn of travel rule, basically, and we are at this critical mass adoption, especially in the next 6 months. So, that's kind of where I think we are from an industry perspective. And what can we do better? I spoke today about the sunrise issue, and one of the other kind of, I would say, overall challenges within travel rule is around interoperability, but more so specifically reachability. And that is an area where we as an industry can come together and do better. There are already various technological solutions that are ready to support interoperability. There's something we at Notabene have called Safe Gateway, for example. We are ready and open to be interoperable with any protocol. I should point out, by the way, Notabene is not a protocol. We are a platform, a full-fledged platform. It's kind of like your Gmail versus the what is it called? The HTMS, right? For the underlining, excuse me, I'm not the technical, I'm the regulatory person, but the underlining protocol that allows us to send our emails, right, between the Gmail and the Outlook or the Yahoo, right? So we are more so the platform, we are the Gmail. So we are ready to be interoperable with anyone, and I think that that's kind of an area where the industry could do a little bit better on.
No, fantastic. And finally, a few more questions that we had from prior. Going into that would be, how do you see the travel rule evolving in the next couple of years, especially with the rapid changes in global regulations for crypto and digital assets overall?
How do I see it evolving rather? Oh, that's a really good one. I think there is going to be more clarifications on what the jurisdictions and the regulators are expecting. I think some regulators have put together pretty good guidance and regulations, but they were not able to answer some of like the nauseating details that you would need to do to really operationalize it. For example, pet peeve of mine is some regulators are requiring the reporting of non-compliance. This is of particularly of important in UK and in the EU, but nobody has really put in writing how they are expecting you to report this non-compliance. Is it weekly? Is it monthly, quarterly, annually? In what format? Are you emailing? Is there a portal? Like, how do we actually do it? So I think we're gonna, in the following years, really start to hone in on the operational questions that ultimately VASTs are going to be asking their regulators as the regulators are coming in also to do more exams. So it's just going to be kind of elevating us as a whole.
Yeah, you mentioned more clarifications, more guidance for implementation. That makes absolute sense. Going into smaller financial institutions or crypto businesses with limited resources, how can they effectively meet travel rule requirements?
So a platform like ours, the whole point of using it is you automate as many transactions as possible with our rules engine. Whether, for example, you decide to automatically reject a transaction that may be with a severe risk score from a blockchain analytics provider, right? So things like that really help you scale it up, where you don't need that many additional resources to help you and your department be compliant with the various travel rule obligations. Like any system, you're able to automate as much as possible, and then you'll have a subset of transactions based on your rules that you will want to kind of manually review. So it really shouldn't be that much of a burden or that much of a lift. And in our report, actually, we go into that because that was one of the questions that we surveyed out of from the industry in terms of how many people they have hired or think they would need for travel rule.
Are there any examples of particular jurisdictions that you would like to highlight from the report?
Well, and within the report, I mean, we saw various degrees of compliance across the different jurisdictions. We saw the highest adoption within the UK, because last year there was a huge focus of all VAS being ready to comply with the travel rule in the UK, which went into effect on September 1st of last year. So when we were surveying, basically, of course, we saw the highest adoption then. And this really was, I think, because there was a great industry effort to come together and work with the regulators that worked with the industry, with the various consultations, to really kind of get everyone up to speed, so that they knew exactly what they need to do to be compliant.
And that's fantastic. And in terms of the international community, basically moving to bring forward travel rule compliance, what role do international organizations and regulatory bodies play to harmonize compliance with the travel rule across all these different jurisdictions that are figuring it out at different stages?
So I've seen a lot of, kind of a lot of good work, obviously coming out from FATF, kind of holding different meetings together. And you have other, of course, international organizations that, there's so many, I don't know which one to think of right now, kind of all the global standard setting bodies, the OECD and all of the others that are coming together to really hone in and start to mention the importance of travel rule and being compliant with travel rule. Within FATF itself, there's the virtual asset contact group. So they're in constant contact with the industry. Notabene has had the honor of being there and presenting almost every time. Most recently, I was in Paris in April, I think, yes, in April of this year, it was one of the two presenters on travel rule. So they're really working to not only put forth, I would say, the guidance, but really understanding from the industry what it is that they need to clarify further to uplift the industry forward.
This points to the role of global standards. Super
Yeah.
important. That's an area that we at GBBC focus very much on. And on to what will probably be our last question from the audience is, can we create whitelists within Notabene if a VAS customer regularly receives deposits from his or her account at another VAS? Is it possible to whitelist these regular incoming transfers after the first check?
So you are able to create a trusted and blocked VASP list, basically. And you are able, like I said, to automate your transfers. I personally would not recommending whitelisting a transfer. And this is just now me, not at Notabene, but me as a compliance officer. I would never want to whitelist any particular transfer, because you know what happens with that? Today, it's a good transfer, but tomorrow it may have gotten tainted down the chain with potential illicit activity in the transaction flow. As we all know, evolution of blockchain analytics, today an address or a cluster is not identified and tomorrow it is. So I personally would never recommend whitelisting a particular transfer.
Well, thank you so much, Lana and Notabene, for joining us today. It's been a
Pleasure.
thoughtful and very engaging presentation and Q&A on the travel rule, progress, and next steps ahead. We look forward to learning more about Notabene's progress in the future. And a recording of this presentation will be circulated to all those who registered and shared publicly on GBBC's YouTube channel. Thank you once again, and have a great day.
Thank you so much. Bye-bye.
Bye.